Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 14 of the Forex market review. Today we're going to take a look at daily FX just to see what news announcements will be coming up for the week. It's a good idea to use daily FX to see which way you think the news may travel and whether or not you want to be moving your trades to break even early, maybe getting out a little bit early or just letting them ride. So without any ado, let's jump straight to daily FX. So here we are at Daily FX. To get to this, just go to www.dailyfx.com/calendar. And then what you would like to do when you're in here is click on your local GMT time. I'm using +10 here in Australia. Then go ahead and filter on your currency pairs and any importance news. So I want to look at all the news for all the currency pairs that I trade, but I only want to see what's high and medium impacting news because the low news generally doesn't really move the markets. So as we can see here on Monday, we had some news come out. One of them was the Aussie building approvals numbers. Now that came out, they were expecting to be -14.1%. It came out better than expected at only -4.9%. And that would have seen strength in the Aussie dollar. And further on, we've had the Australian interest rate decision. It came out at 1.5 and the forecast was 1.5. But what we've noticed is the Aussie dollar starting to fall. And that's because the RBA governor started to speak about the markets and what they believe is happening in the property in specific and in regards to interest rates. And they believe that Australian property, especially in Melbourne and Sydney, is way overpriced, and people are seeming to want to pay more because of the low interest rates, and they think there may be a bubble and we may have a problem, especially if the people will lose their jobs, then they wouldn't be able to pay the interest rates on the mortgages, and then there could be a large sell-off. So that's the reason why there's starting to see the Aussie dollar declining. And what we have coming up with some more news, but what's important for this week mainly is if we come all the way down to Friday, and that's the first Friday of each trading month, we have the US non-farm payrolls numbers. So last month they got 235K. This month they're only expecting 177K. So if we get a number which is 200K or more, we're going to see that US dollar strengthen. So depending on what you're feeling, where you think it may go, definitely look at those numbers. But just prior to those numbers coming out, there is the USD initial jobless numbers that comes out the day before. So if those numbers are good, then we could probably expect some good numbers here, and that will depend on which way you want to take your trades. So what we're going to do now is jump to the charts. So the first chart we're going to look at is the pound Aussie. So last week we were looking at taking a long position in this one. We've seen it come down, find some support at this daily DSR zones around here. Then we're looking for a pushback higher. We had our AO divergence, so this was going to be a nice trade, looking to hold it for a long period of time. And here and that's because we had our lower low in price with a higher AO. We then wanted to see it push up, have a pullback, find some support, and then look at a buying opportunity. So on the 1 hour chart, we would have seen it bounce around these levels. Whether or not you entered on roughly this candle here, which almost broke the 200 MA, or you waited for this one here, you would have had your stop losses somewhere down here of probably between 150 pips, and we've gone up to 200 pips. So if you had a nice tight stop loss, you probably might have made 1 to 1.5, and that's what I was looking at, and that's what I've made, and I would have exited the trade would have been up here. And I posted that on the Twitter feed saying that it's made its 1 for 2 up to these levels here. If you had a really tight stop losses, some people would like to see it come down, pushed up, tighten the stop losses down to here, and definitely made their 1 for 2. But if not, you would have made your 1 for 1.5, waiting for that breakout above the 1 hour 200 EMA before getting into the market. Setting up this week, we have a few pairs. Here we have the Euro New Zealand. We can see it's bounced a few times and then started to push back lower. As we can see, it's tested the 4 hour 200 EMA line with a push back higher and starting to find some resistance around this DSR zone here. So what we want to do is look down to the 1 hour chart. But just before we do that, we'll just zoom out. Well, we don't really need to zoom out. What we can see is we have a higher high in price and our lower AO. So because we have AO divergence and clear divergence, come back below the line before going back above. And that's on the 4 hour chart. We can now look for a longer position and not as just a short-term trade. So here we can see it's pushed down. It's formed what would be in a wave 3 here with a large AO coming back to zero line. Unfortunately, if we look at that wave 3 movement, it never came back, or almost came back and touched the 38.2. So whether or not you entered the trade here, put your stops up here around 50 pips, you might have exited down these levels, or definitely you would have been at break even. And worst case scenario, you would have stopped at break even, taken some positions off down here at 1 for 1, and the rest taking off at break even. Personally, for myself, I'm still treating this as a more of a longer term trade. So I'm now looking for this 4 hour. I want to see it come back to zero line. It's almost done that. I can see the stochastic is now way overbought. It's come back to its minimum 38.2 on the 4 hour movement. It's hitting that DSR resistance area, and we can see it pulling back here. So I'm looking for an entry round about down these areas when it closes below this 1 hour 200 EMA line. We could be looking at a stop loss around about 50 pips. Maybe if you want to be a bit more aggressive, you might want to get up here, somewhere need 85 to 100 pips. But definitely before it gets to these bottoms, you want to be bringing it to break even, maybe even taking some of your position off. If you've got the tight stop loss, you can definitely get out for 1 for 2 down to these levels here. Where do we think it's going to go? This time use your Fibonacci expansion tool. Go from the highs to the lows and then back up to the highs again. So if we think this is the highest point there, we can just look at where it can go, and the first place of exit is this 61.8 level down there. On the higher time frame, as we can see, it's the bottom of this DSR zone. So if you were to get in and you wanted to get out, definitely buy there. We're looking at 150 pips. So 75 pips stop loss for 150 pips will definitely get you your 1 for 2 on the Euro New Zealand. On the Euro USD, we have a similar trade. Just remember that both Euro pairs, so it's going to be affected by the Euro. So if you take one, they'll probably both win or both lose. This Euro USD could be initially affected on Friday with the non-farm payroll numbers come out. So just be cautious there. But pretty much the same setup. The only difference is we don't have our AO divergence. We have higher in price, but we also have higher AO. So this one would be a quick short-term trade. We still need to see it pull back to its minimum 38.2. So it's got to pull all the way back up here. Then we'd be looking for a selling opportunity. So until it comes back for wave 4, we can't look at selling this one just yet. But the Euro New Zealand, we can look at a selling opportunity. The other trade which has just started to set up is the pound yen. We're seeing it push back lower, find support here. Now we're expecting a push back higher. So just be cautious when you do get in. We want to be looking at moving to break even before these lows again, because breaking these lows may be a little bit difficult. We then want to look for a higher high in price. And unfortunately, we don't have that. And but we do have our waves 3 here. So 1, 2, down for 3, coming back for 4. So this one's got to be a very aggressive trade. If you do get in and it comes back to these levels somewhere up here, drop in our indicator. So it's got to come back a bit more. It's probably going to come down and pull back up. I want to try to come and test this 1 hour 200 EMA line. But if we do, probably looking at tight stop loss of risking 1 to definitely making 1.5 before these lows, which will be great because it's going to match up with that daily DSR zones. We definitely don't want to be pushing much below those because it's a tight trade. And if you wanted to just not take this position, then that's fine. It's hit this DSR area. And personally for myself, I might not even consider an entry now that it's already hit these levels down there. The other trade is a USDJPY. Saw it bounced a few times, come down. We took a nice position down here, made our 1 for 2. We then exited out. So now it's come down, found support and starting to push back higher. Where do I think it's going to go? Probably around these levels here. It's getting there. Do we have much more movement? Maybe, maybe not. We do have on a 4-hour chart our AO divergence with our lower in price and our higher AO. So I'm still looking at this trade. On the 1 hour chart, it has really started to move up with its 3 down for up for 5. So if I do, I really want to see it pull back the entire move of the wave 4. And then we want to see it come back down, retest its 38.2 area and look at a possibility of going higher. But again, you'd want to be having a tight stop loss, maybe risking 100 pips mostly. We don't know until it's had its pullback. But if you're risking around about 100 pips, you might be able to get out for your 1 for 2 before these highs. And you definitely want to be looking at that because that's where this daily DSR zone is. That's the first point of resistance. So you want to be cautious there. Thank you for that. That was week 14 of the Forex market review. So just to refresh, a great trade on the pound Aussie this week, exiting out at a profit, and we've got a couple trade setups occurring. Remember, follow the rules. The rules that I use are at my discretion. Obviously, look at your own rules, take your own financial advice, and follow them religiously. And go for that more than 1 for 1. Go for that 1 for 2 risk to reward. And look at those resistance areas because the fib expansion areas matching up with daily DSR zones or horizontal zone levels is a key of reversal. You don't want to get stuck in a trade which you haven't at least brought to break even at those levels. Here at Sane Investment Solutions, we wish you all the best in your success. Take care. Bye-bye.